So Jared, like one of the things that we come across quite a lot in our roles is some of the frustrations, to put it politely, around setting up a bank account internationally. There's that whole common view or maybe misconception that because I'm working with a US provider and they have a bank account internationally, it's going to be easy. And I think that's a real pain point for companies right now. And I'd be interested to get your perspectives on what they could do, but what other options are out there.
Thanks, Simon. And yes, that is, as we hear from our clients as well, a very big pain point, right? As you try to open up a new bank account in Europe, you're somewhat restricted to the limitations abilities of what the banking partners are that the U.S. institution has across the pond, right? And so, as you say, hey, I'd like to set up a bank account for me in the UK in pounds, your provider has to go through a lot of KYC, a lot of anti-money
Mm,
laundering steps, and we've seen it take anywhere from 8 to 12 weeks just to
wow.
get a simple bank account over in the UK, which may be for the US entity that's trying to get it, or it could be that you're trying to get it set up for the newly established entity over in the UK. So one of the tools that we've started providing to our clients are multi-currency accounts. And the different designations of the different types of these multi-currency accounts, but one of them, we can be as nimble to the point where I can have that account open and running for you in one day.
So what about things like KYC and AML? Because one of the biggest frustrations is sometimes if you're going to France or even like as far as Asia, you have to be there in person.
And from our standpoint, the anti-money laundering and I know your client steps that we take here in onboarding the U.S. entity basically allow us to cover that with the multi-currency account in Europe for sure.
Okay.
In other jurisdictions, yes, as well, but for sure in Europe, it just transfers straight across.
So what would be what's the biggest frustration you see above and beyond that around banking?
Um, eh, Number one, deciding what currency you need to be doing business in the foreign country. And a lot of this comes down to us sitting down with the client and saying, are you going to be receiving revenues in pounds? Are those pounds going to be owned or allocated? Sorry, are those revenues going to be allocated to the U.S. parent entity, or are you actually going to run revenues through the subsidiary? So it's kind of, yeah, I guess in your regard, are we going to the cost plus model, and
Mm.
what are the advantages of doing that, or not?